Entre pa' que te enteres, este es el detalle. Si caliente está la cera, más caliente está la calle.
Mira, llegó el son cubano.
Hola mi gente, and welcome back to another video from the We Are Investing channel, a channel that is dedicated in investing and personal finance. Echo! Echo! Can you hear an echo? Because I can't, and this is not an echo chamber. On this video, we're going to be talking about CCIV, and I'm going to give you my honest thoughts on this stock and why I think there's a lot of risk and you need to be concerned. And I'm going to go over all of that and more on this video. However, do not confuse me for a bear, because I am not a bear on CCIV. I have a very large position in this stock and we got in early on. But the stuff that's happening right now needs to be discussed. There's a lot of confirmation bias when it comes to CCIV and Lucid Motors that I think people are not doing their due diligence on. They are not considering this when they invest in this company at the current share price or around the current share price, and it needs to be said. Now, I am a bull on Lucid Motors and CCIV. I want this back to take them public, and I posted on the Patreon. This is a benefit that you get when you join the Patreon. Whenever I open or close a position, I post on the Patreon. But on January 11th, when the share price was $12.80, I posted that I bought a large position in CCIV. And now that position is worth way more. I'm not trying to brag or anything, but that position alone is up 159.15% for a total unrealized gain right now, because I have not sold of $28,998. Now, I've also been buying some call options with CCIV as well. I sold some, I moved them over to a next expiration date. I've been trading them, but now I am holding 2 call options that expire on March 19th, 2021 at a strike price of $40. Now, I've been selling some of these because I want to lock in some gains. I want to cover my initial investment at least, because the opportunity is just too good right now to pass up on covering some of my initial position to reduce my risk. So Patreon members have been making a ton of money off of this pick because we got in at under $13 a share. And with a Patreon only costing $5 a month, they made their money back by a ton. This is a great trade. We got in very early on, and it's one of the benefits you get when you join the Patreon. Another benefit is you get to join a Discord server of over 400 members where we talk stocks on the daily, and great picks are presented there as well. And you also get early access to videos. I upload to Patreon before I make the videos public on YouTube. But back to CCIV. If we take a look at the charts, we can see that the stock is trading at around $40 a share. It has a 52-week high of $41.37. And we can see that there's a lot of volatility with this stock. There's a lot of risk as well. The stock was at $27.50 and it dropped back down to $19.35. Then it's also traded from $35 to $30, and now it's at another high. So if you get in at the stock at $40 a share, I would expect some volatility if the deal is not announced relatively soon. Usually what happens with CCIV is that there's some bogus stuff going on where people are speculating hard that the deal is going to be announced on a given day and the stock runs up. But then on that day, if a deal is not announced, the stock drops a decent amount. There's a lot of volatility. You have to have some very diamond hands to hold this stock at $40 a share if it drops 15-20% after you open up your investment. So that is one factor with CCIV. There is a lot of volatility, and it seems that traders, if you follow this pattern, you can make a ton of money. You get in on the hype, you see some bogus stuff go out there that's supposed to indicate that the deal is getting done, which it does not. If you know anything about SEC filings, you know that the most recent one doesn't mean that this is a done deal by any means. And some of the other stuff that we've seen on Bloomberg Terminal, that is also very high speculation. I think people are looking too into these things, and really everything that we need to know was provided to us very early on with the Bloomberg rumor and also all the connections between the PIF, Lucid Motors, and CCIV. There's a lot of connections there, and it does point that Lucid Motors wants to go public and that CCIV might be a great vehicle to take them public, and there are relationships already built between CCIV and Lucid Motors. But traders can get in off of these rumors, they can sell, and they can rinse and repeat because it's been happening time and time again. However, for long-term investors, and I think that Lucid Motors would be a great long-term investment. I want to invest in this company for the long run because I think they have great potential. And also, I love the demand right now from investors for their company. But that demand might actually be a huge issue, and let me explain why. The CEO of Lucid Motors went on CNBC recently for an interview with Jim Cramer and David Faber. During that interview, a lot of good questions were presented, but I really want to focus on one question in particular. Let's roll the clip and then we'll discuss afterwards.
And I'm sure you're aware of the fact that the speculation around it has been that you will merge with it to go public. Is that the case?
Well, you know I can't comment on any such matters. I can neither confirm nor deny any such thing.
Well, I mean, if you're at one value in terms of the way you're thinking about the company prior to this, and then you watch this stock triple based on the expectation that you will be merging into it, does that change your own prospects, or I should say your own view of the value of Lucid right now in the public markets?
Look, I think Lucid value will be truly realized when we've got this kind of production. I say every day that until we've made a production car and we start selling to customers, we haven't achieved a damn thing. And the team back at base is working flat out now to industrialize this car as we transition from primarily an engineering, a tech, an R&D company to a phase of our growth where we become a manufacturing entity.
But are you going to become a public company, either through IPO or a SPAC?
I really cannot comment on that right now, as you know.
So the question really is whether the hype, the speculation, the amount of pricing activity, the way CCIV stock has increased, is that a threat to the business combination altogether? Because now Lucid Motors sees that investors really want to invest in this company, and they're probably worth more than $15 billion to go public, and they might be worth more than CCIV is able to provide to Lucid Motors to take them public. And that is a huge issue in itself that we need to take into consideration, and there's a lot of risk still embedded with CCIV, even though it seems that they are going to be taking Lucid Motors public. The bottom line for Lucid Motors does not matter what kind of relationships they have built with Michael Klein and CCIV. The bottom line for that company is how can they go public and how much money can they get? They want to get as much money as they can, and they also want to fit it within a certain timeline because they need that money to be able to continue with the business. Getting out to market this summer, this spring, is very crucial for Lucid Motors. The quicker that they can get out to market and get their products out to people, the better, because more and more competition is going to be coming out. Their technology is stellar right now, but if they wait too long, other companies might catch up, and then they would no longer be the leader when it comes to range, when it comes to efficiency, with how many miles you can get per kilowatt hour. Lucid Motors has great technology, and they really built a great vehicle. But the longer they wait, the more competition is going to be coming out, and the less likely people are going to buy Lucid Motors over a competitor. So I don't think the company is going to stop evolving. I'm not trying to say that. I'm just saying it is very crucial for them to get out to market as quick as possible in the United States and overseas in Europe as well. So there's two factors at play right now. First is time, and a SPAC definitely fits their timeline. IPOs take longer. So that is good for CCIV because they are a SPAC. The other factor is capital. How much capital can they raise in their initial public offering? Whether that's a reverse merger with a SPAC, going a traditional IPO, or doing a direct listing with a private round of funding as well. Those are all options. We don't know what's going to happen here, but CCIV as a SPAC can only provide so much capital, and they could get more capital using a different vehicle like a direct listing or a traditional IPO. And that is the concern here. Is the demand so high for Lucid Motors that now the valuation that they deserve or they think they can get, CCIV can no longer provide, and they have to go a different way? Because in all honesty, if they can get their money through a private round of funding and be able to get the car out to market when they want to, they can go public next year for all they care, as long as they continue progressing the business in a timely manner. It does not matter if the stock goes public today or next year. The only thing that does matter with that is if the hype is still as high as it is today, next year, because if they wait too long and the EV hype starts to fizzle out, they're going to be leaving a lot of money on the table as well. There's just a lot of factors here, guys, that I think people need to realize and consider all of those factors when they enter into a position with CCIV, especially at the current prices, because if things go wrong, the stock is going to drop like a rock. So in my honest opinion, at the current share price, I would not get into CCIV. However, whenever Lucid Motors goes public, whether it is CCIV or a different way, I would be an investor in that company. Even if it's at a little bit of a higher share price because you get in after the initial pop, that is okay because it's going to be a long-term play in my personal opinion. If we got in at CCIV at $13, which we did, and this company does take them public, that's going to be a great investment. But if it doesn't, and then CCIV and then Lucid Motors goes public with a different company, I'm going to get into that different company at whatever price it might be as soon as that news is announced, because I think you need to jump in early on once you realize that the deal is done and they are no longer rumors, whether that's CCIV or a different SPAC or a traditional IPO or a direct listing or whatever it may be. So with all that being said, do not fall victim to FOMO, do not fall victim to confirmation bias, and do not buy into all the stuff that doesn't really have any backing being presented in social media right now. Do your due diligence, know what you're buying, know the risk behind it. If you're okay with that risk, then that is fine as well. It's a little bit too risky for me at the current share price, but I also got in at a much cheaper price, so maybe I'm a little biased here, but whatever it may be, just know the risk. And that pretty much wraps it up for this video. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. And also, do not forget about the Patreon, where you get to follow the portfolio in real time. I post whenever I open or close a position. You get early access to videos, and also you get access to a Discord server of over 400 members. Now, in the video description down below are links to my Twitter, a Facebook group, and promotional links to Webull, where you can get 2 free stocks worth up to $1,600. But you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya!